Good morning. I'm Bill Blain, Chief Strategist with Shard Capital in London. Well, not in London today and not for the foreseeable future because of the coronavirus. This morning, let's talk about the end of capitalism and free markets as we know them. Over the last few days, we've seen extraordinary measures by central banks around the world in order to combat the economic effects of coronavirus. Yesterday, the US Federal Reserve came in with a whole raft of new packages, buying corporate bonds and underpinning the whole corporate market. We've seen the UK government come in and effectively promise to pay everybody's salaries, although we still need to see the details on how the self-employed are treated. And Europe, well, the ECB is desperately hoping it can do the same things. But when even Germany is willing to make an emergency loan to Italy, you know that this is getting seriously. But we need to think through the implications of what central banks and governments are doing. And this is where it gets very interesting and dangerous. Because if we look at what's happened over the last 12 years since the last financial crisis in 2008, then artificially low interest rates and quantitative easing have not created a sustainable nor healthy economic system. What we've seen is massive financial asset inflation. And by that I mean financial assets like stocks and bonds have gone through the roof because artificially low interest rates pushes up the cost of bonds, and low yields, which result from high bond prices, mean that you get yield tourism. Now, yield tourism occurs when people need to look for better returns. And that means they've moved away from simply the bond market and into the equity market. And that's one of the factors that has pushed, or did push, equity markets to record highs back in February of this year. But it also means that corporates have been able to go out and borrow loads of money. Now, over the last 10 years, we've seen some $14 trillion borrowed by corporates from the bond markets. Where did all that money get spent? Was it used to build factories to increase employment and push up the value of products? Well, sadly, no. Most of that money was actually spent on stock buybacks. Now, they have a very interesting effect. Of course, if you spend loads of money buying back the stock, it pushes the price of the stock up. But that also means that the management get rewarded with higher bonuses, or that private equity owners can take even more out in dividends. As a result, we've seen enormous distortions created by policies where central banks and governments have stepped in. And what worries me particularly today is that it could all happen again, but even on a grander scale as a result of coronavirus. Now, there really was no choice but for central banks and government to step in and try and save economies. But the long-term effects could be extremely damaging. More to the point, they will continue to create social unrest because the effect of putting more money into the boss's hands or the owners of companies is to double up on income inequality. And although we've seen that kind of addressed in recent elections, for instance here in the UK where the Labour Party was kicked into irrelevance during the last election, even though the Tories have subsequently proved themselves even more socialist in the speed at which they've acted, the fact is that at the moment it doesn't look like there's much political will to push through policies of the left. That may be changing, especially as a result of the coronavirus, when people come to understand that the money that could have been spent on health spending to create hospitals that would have been able to address the crisis wasn't. And it's occurred at a time when money has generally flowed to the richer parts of society. It's going to be a long-term crisis, but I want to leave you with one thought about how badly it can go wrong. And as I often do, I'm going to use Boeing as an example of how to do things badly. Back in the early 2000s, Boeing was without doubt one of the top companies in the world. They made superb aircraft. They were just developing the Boeing Dreamliner, the 787, a new aircraft built with composite materials which made it more efficient to fly and also gave a great passenger experience because it could be pressurized to a higher level, meaning it was more comfortable. It did cost them an awful lot to develop the aircraft, but they had to do it because the jumbo jet was coming to the end of its remunerative life, and of course all they had left was the Boeing 737 regional jetliner, which had been going for nearly 40 years at that point, but was creating steady income. The Dreamliner was introduced and proved very popular as we expected. But then what did Boeing do? Well, over the years from 2008 till today, they've bought somewhere in the region of 43 billion of their own stock back from the market. And they financed that by borrowing heavily in the bond market, but also using the profits that were generated from the 737 program. 43 billion is an awful lot to spend on your own stock, but it was great for Boeing executives who took home massively inflated salaries and even more massively inflated stock option packages. But at the same time, they decided not to spend money developing a replacement for the venerable, by this time 50-year-old, Boeing 737. No, they simply redeveloped it, added in some bigger engines, pushed them forward, discovered that was a stability problem, so they fixed up some kind of software system called Max that tried to make the plane fly right, even though it was inherently unstable. It didn't work. We all know what happened. 2 of the aircraft crashed. 346 passengers were killed. The Boeing 737 MAX is still grounded. Boeing's stock price has collapsed. Many of the executives have been sacked. They haven't lost the money they received though. And yet Boeing is going to the US government for a bailout. In the future, we have to make sure that greedy corporations don't get rewarded, but also we need to make sure that the kind of policies that have been forced through to address the coronavirus don't end up permanently distorting markets.